Good morning. On Wall Street, stocks edged lower overnight with energy shares weak. The earnings season kicked off with some investors worried about higher input costs. Well, let's take a closer look at rising commodities prices. It might have inflated the prices of imports of many countries around the world. Well, for an outlook on prices, we're joined on the line by Hambro, the chairman of Hong Kong-listed IRC Limited, which develops and operates industrial commodity projects in the Russian Far East and in northeastern China. Mr. Hambro, good morning to you.
Good morning.
Have iron ore prices moved up broadly in the past year?
They have. The price increase reflects the move in the fundamentals of demand and supply. You've still got a quite phenomenal growth in demand in this part of the world, and the supply picture is still chasing that.
It looks like prices are up 5 times, actually, 5 times over the last 5 years. Can the global economy support those kind of higher prices?
Well, when you've got the imbalance in demand and supply, I think it can. We have to remember that we sit in a picture where the growth picture in supply, mainly coming from Australia and South America, will really drop a gear and accelerate only in the next 3 to 4 years' time. And there was some interesting forecasts by Citigroup recently that put their demand and supply balance or equilibrium really only happening in 2015 and beyond.
But are you a little bit worried that we might see something like we did in 2008, where when you get this big spike in prices, that it shuts down demand, that it actually, you get this demand destruction phenomenon?
Well, in iron ore, there really isn't any substitution. The iron ore feeds obviously the steel market. Consumption and capital growth has a definite need for steel, and so there really isn't anything to substitute the iron ore in that program.
However, when you look at like the latest auto sales, seems like even though automobile sales are growing, the pace of growth has slowed significantly in China. You can't keep going up and away forever. What are your sort of estimates looking out over the next 6 months to a year for iron ore, obviously, which is made, is used in making steel?
Well, you're absolutely right about auto sales, but actually they're a small part of the steel consumption nowadays. Most of the steel that we see being traded, particularly in China, goes into the construction, whether that be in railway bar or in building materials. For us, we reported our first production last year, and that was meant a revenue of $25.8 million. This year we reported a 3-fold increase to our reserves at IRC, and over the next 5 years we're reporting an increase from 1 million tons to close to 10 million tons of production. So
what are the hurdles that you face? What are you sort of nervous about when you go to sleep at night?
Many things. In reality, there are a number of strings that we need to draw together to close that production schedule and make sure it works. What we have done since we listed last year is deliver a financing package and a construction package. So we secured a $340 million debt facility with ICBC, and we secured a what we call an EPC contract, engineering, procurement and construction contract, with CNEEC in China. So that means that we are funded and we have a partner who will construct the operations for a fixed price and over a fixed tenor.
So you're more worried about supply than demand?
Well, for us, supply is key because we're a supplier. But the demand picture that we see in the northeast of China is very strong.
And just briefly, the impact of the earthquake and tsunami in Japan, does that cause some recalculation?
Well, I think, the situation there is obviously very unfortunate. And we've been speaking to a number of the Japanese steelmakers. In fact, I'm meeting one of them today here in Hong Kong. The picture over the long term, I think, will be a positive one for the iron ore price, because I feel that there will be a large reconstruction effort north of Tokyo. But I think in the medium term, there isn't the concern that some people feel that there will be a fall-off in demand.
Okay, Mr. Hambro, thank you. Jay Hambro there, chairman of Hong Kong-listed IRC Limited, which, as we mentioned earlier, develops and operates big projects in the Russian Far East and northeastern China.